All right, folks. The inaugural episode of How's the Market with my man, Ed Diaz of Kuna Capital, man. So I'm so happy to have you on this. I'm so happy that we decided to do this. That conversation that we had last time went so well. I thought to myself, how are we not doing this every 2 weeks or so?
We are now.
Now we are.
Watch out, people. We're coming for you.
So, I mean, it's just, I love talking to you. I think every single time we talk on the phone, we'll end up talking for like 30 minutes about the market and just what's going on. And, we feed off of each other's energy. So with that being said, so I thought we wanted to start this and just put some content out to all the folks who, we all know how headlines terrify more than clarify. And a lot of times, in this noisy market, we have access to so much information on our smartphones that, hey, why not take the time out of our day just to educate the public and let them know what's going on with two folks that literally do this 7 days a week and put all the time in it.
We live, breathe it, eat it, spit it out, don't we?
Yeah, sure. Yeah. So
I love that statement, by the way. It's a great way to just jump off about that most headlines terrify, don't clarify. I mean, besides that being a great T-shirt, I think we should turn it into merch.
Yeah.
For the podcast. I think you're spot on. Here's the thing, and I've always made this joke, is that I've never seen a CNN anchor with a real estate license. And yet they purport to be experts when they're just reading stuff. And here you and I are, where we live and breathe this stuff 24/7, man. I mean, I wake up thinking about this, and I've made another joke that sometimes I go on more appointments in my sleep than I do when I'm awake, and I do 5 to 6 a day when I'm awake. So, we are all in, folks. I mean, this is what we do because we love what we do. And I've said this many, many times before, is that usually the path, or let's call it a career path, is you start out with a job, right? And we all know what job stands for, just over broke, right? And then you graduate to a career, right? And that feels a little bit better, more money, maybe a little bit more prestige. And if you're really blessed and lucky, you get to transition into what's called a calling. And I know in conversations that you and I have had, Nima, that we're definitely in that category where we feel this is a calling. This is how we live a purpose-driven life. This is how we get to bless other people, because buying a home is not just about paint, stucco, molding, garages, and number of floors, number of bedrooms, number of bathrooms. For many people, it's a societal shift. It's a socioeconomic shift. We have some folks that move into better neighborhoods. I mean, they came in from not so great neighborhoods, or they were living an okay neighborhood, and this was a socioeconomic shift for them, going into better schools for their kids and better socioeconomic lifestyle, right? So we are in the change-making business, and therefore it involves a lot of education. We hang our hats on education and giving all of you really sound advice that is not sales. Let's be very clear here that this isn't really about sales. This is about providing education and guidance that really matters.
Yeah.
That will make a positive impact in your lives, or in the lives of you and those that you love around you, whether they're friends, colleagues, family members. But our goal here is to make a positive impact and to inspire you to move to different heights. And we're going to be talking about a lot of topics. It's going to be real estate, of course, and, I'm in lending, so we will talk about those things, but we're going to talk also at large things, and we'll bring other guests to speak about other areas of your overall puzzle, if you will.
Right.
That will positively impact you.
And while we were waiting for the mics to warm up, we had started discussing this newest Case-Shiller report, right? So, before we jump into the numbers, I feel like we both totally agree that that housing, at the end of the day, it's not like the stock market, right? The shelter is not the same as like the S&P 500. So of course, most homeowners are here to make money, right? I mean, that's ideal, but that's not necessarily the only driving factor of why people buy homes, right? Sometimes we tend to forget about the American dream, when we get so big on stocks and followers of Seeking Alpha and some of these, companies that, make sure that they assist you with your portfolios. But we have to remember that a lot of people want to have the American dream of buying a home. They come from a country, for example, that you could never own the actual property that you live with. I can't tell you how many times I've talked to people at open houses where like, wait, so this is mine? I own the ground too. And I'm like, you own the ground to the core of the earth and to the top, as far as your eye can see up, technically speaking. And I feel like, we're so blessed to be in a country that provides stuff like that, right? Where people can't just come and take it from you, like the government can't take it from you. So, we always have to keep that in mind. But so I digress. Yeah, you had mentioned the Case-Shiller report. And let the viewers and folks.
Yeah, let's talk a little bit about that. But before that, I do want to, because even though you digress, I think it's so important because we have free flow here. That's part of what these podcasts are about as well for us. Is that we are humans, right? We're not just talking heads, right? I think one of the important things to keep in mind is that when you wake up in the morning, you're probably riddled with first class problems. Let's not forget, whether you were born here or you came from another country or you're second, third generation, doesn't matter really. We all have dreams. And it's true. Part of dreaming is building, and part of building is sacrifice. Most of the time, hopefully, it'll be short-term sacrifice for long-term gain.
Yes.
Buying real estate is definitely a long-term gain. Let me tell you, for those folks who say it's not an investment, well, look at the 5 years prior to you owning how much you built, and look at the 5 years that you owned, and you tell me all that equity that is yours isn't an investment. Matter of fact, I've always said that buying a home is the only investment that I know that you can sleep in, get tax write-offs, and get appreciation. It just, and I'm an ex-stock guy, right? Ex-financial advisor. So I come with some experience here.
Right.
So it's a wonderful thing. I'd rather you, in 5 years, make other decisions with your life with an extra 500 grand, if you're here in California, or $1 million, than without it, right? Because money doesn't buy happiness, but it does give you a lot of options, and it allows you to breathe a little bit more and be able to do the real work, I call it, right? Which makes you happy, things that make you happy. So Case-Shiller. The Case-Shiller report just gives us, an idea and numbers on appreciation. And year over year, it came out yesterday, 20.7%. So for all those people that think that there's a bubble and property values are going to go down, I've been saying this, I don't see that happening. This is not 2008. Let's dive a little bit into that. 2008, what really happened here? Well, think about it. Lenders developed what I call mortgage crack. It got people addicted to these loans where you didn't have skin in the game, zero money down, and some programs even gave you 25% extra over. They call them 125% loans, right? In the hopes that you would use that extra 25% on the house to do improvements. But we all know you went and bought a Mercedes, right? Okay.
Your house is an ATM.
So number one, you had no skin in the game. Number two, they weren't verifying anything. They didn't even check a pulse, none of your income, none of your assets. That's why they call them Nina loans, right? No income, no assets. Nobody was verifying anything. Think about that. If you just think about that for a second, pause, where they're not verifying anything and you don't have skin in the game, I believe that is the quintessential definition of risk.
Yeah.
I mean, so if something happens economically, which it will, because you're artificially inflating home prices, think about it. All those people that are buying houses with no skin in the game creates what? More demand. What happens with more demand? Prices go up. Simple Keynesian economics 101, right?
Mm-hmm.
So it creates that artificial demand, really, in my opinion, and values went up because of all that artificial demand of people with no skin in the game, not verifying. We don't know if they're great candidates or not, or if they can even afford it because people lied on their applications because nobody's going to verify it. So guess what? Market collapse happens, right? Property values go way down. And when your property value goes down 50% and you have no skin in the game, what do most people do? They bail. Now, I never understood why people would bail when it's the house you live in. Who cares? Wait it out. But that's not how people are wired emotionally.
Mm-hmm.
Emotional, they make irrational decisions. So EQ, emotional quotient, low. IQ can be high. You can be very book smart. Intellectually, you score off the charts. But if your EQ is low, you're making emotional decisions that are typically not rational. And that's exactly what happened in 2008. So mortgage companies went out of business because then they were selling the paper, meaning the mortgages, to the next person, and they kept kicking the can because a lot of those mortgages that were sold as great mortgages, because they didn't verify income or anything, the people started defaulting because the reality is they didn't make 20 grand a month. They made 3 grand, 4 grand, right? And here we go. A lot of defaults started to happen.
Right.
And so now mortgage companies could not sell to the next person, and they were carrying all this defaulted debt, go bankrupt because they couldn't hang, right? And so that's exactly what happened. That is not today. Fast forward, here we are, June 1st, 2022. Most people put at least 20% down. I see it every single day. They have, and by the way, in California, let's say here in San Francisco, at the median price of 1.7, 20% down, right? We're talking $340,000. That's some skin in the game. That's not chump change. That is the price of a home in some other areas of the country.
Yeah,
so do you think somebody's just going to be willy-nilly just going to decide, you know what, I'll just let the house go? Not so fast.
Yeah.
So I say all this to support my thesis here that there is no bubble. Prices of homes are not going to go down. That said, P.S., I love you. The appreciation speed, or the speed at which properties are going up, will slow down. So don't get it confused. I'm not talking about the value of the home. I'm talking about the speed at which it's appreciating will slow down. We saw 20.7%. Man, that's robust. You know what it was in Tampa? 34%.
Wow.
34% in Tampa, but 20.7% if you just take the average nationwide. That number will decelerate, right? So they won't appreciate it as quickly. So that'll give you at least rest that it's not continuing to get outside of your reach. But alert, you might miss the boat. If you don't do it, it's going to continue to go up regardless. Go talk to your grandparents for a second and ask them when their $20,000 house or $10,000 house went to 100 grand, how shocked they were and how they thought there's no way this house is going to 200 grand. And then it went to 300 and then it kept going, right? Don't be the victim of that. So my slogan, t-shirt number 2 on the merch, is when and if you can, then do. Don't wait. And I can do, by the way, I can do a report for you that'll show the cost of waiting, that'll show you the actual numbers of appreciation on purchase and also interest rates in case they continue to go up. Now, we've been seeing in the last 3 weeks, rates have been going down. Today, unfortunately, not such a good day. Rates went up. I have alerts from my technical forums that it's time to lock today, June 1st. So for those of you who are watching, make sure that your mortgage person is very technically adept and knows when to tell you when to lock. You should not be asking for what the rate is. Of course, you want to know what that is, but you want to find out how good is your mortgage person at being able to advise you when to lock. They should be tied into the markets, right? To let you know. It shouldn't be just reading.
It reminds me of something that Mike Simonson said. I'm sorry to interrupt, but
no, go for it.
I mentioned if you like the home and you can afford the home, buy the home. It goes back to what you just said, right? If you sometimes you don't want to overthink these types of things, because when do we know when the prices have peaked, right? When do we know when the prices have bottomed? I've shared this with you, this story, and a lot of my friends when I was buying my first home at the beginning of the pandemic. Our single family home that we bought was in July of 2020. And a lot of the folks that I shared this with, that I was going to buy a home, were like, what are you doing? We're at the peak prices right now. You're buying at the peak. You're not going to make it.